What's up, guys? My name is Shebloski. I'm a financial advisor and entrepreneur and have been an entrepreneur in multiple business types that are not just financial services. So I understand that the biggest thing that entrepreneurs struggle with when they are both broke and making money is how do you decide when to invest into personal assets, real estate, traditional 401k, stocks, bonds, and then when do you invest in yourself and into your business, which are actually two different things, right? So investing in myself might look like me expanding my career. Do I need to go back and get another degree, right? Do I need to do something, maybe that is some sort of education? Do I need to get a mentor? Or do I need to get investments into my business? Do I need to hire more employees? Do I need to buy more inventory? Everybody knows what I mean by that. But the point is, we need to decide when we do each of these things. And I want to first mention that everything that I'm about to mention is a continuum, not a binary. So for example, right, I say 0 to 80K as a range, right? But if you live in Alabama, 80K is different than California, right? And same thing, it says here, like the blue and the red is young versus old. And so when you're younger, like that's a continuum, right? So young could mean 35, young could also mean 20, and old could mean 40, and old could mean 70, right? So it's all a spectrum on what these things mean. By no means is this specific investment advice to one person. If I were to advise you, we would sit down and have a conversation about what your specific situation is, but this should serve as a general guideline to how you should approach these topics, okay? So I broke this up into 4 general categories, and what they are is they're based off of income, okay? Take home pay, not revenue. How much are you actually taking home from your business? And so the difference is 0 to 80K, right, is kind of our first range as an entrepreneur, which is obviously you're broke and you're surviving. And if you are making less than 80 grand in your business, you are in one of 2 situations. One is you've delegated everything out and you literally do nothing for your business. And the other one is you are just struggling to get off the ground and you're probably working, 100-hour weeks just to survive, right? And so when I look at this, I say no matter what, if you are young or old in your business, you need to invest every single dollar that you have back into the company because it's not sustainable, right? And people who get to 75K a year in their business and decide to start to do the 401k and invest in the stocks and buy a real estate property, they're dramatically lessening the amount that they can actually make in their business. And they're making a huge just gun to the head to the growth of the business. And it's less of a gun to the head than what it really is you're putting like ankle weights on to your business by doing that, as you think you're hedging your bets. You don't need to diversify. You need to focus on what you're doing. So under 80K a year, I don't care if you're 60 years old, you need to go out and grow that business. Now, the second range is where things start to kind of go down 2 different paths from an age perspective. And this also depends on what your goals are, right? So between the 80 and 250K a year range is when we start to get into like a good salary. And what I mean by that is like, you can provide for a family, comfortably off of this, depending on what state you're in and which part of the range you're in. But this is where we can start to decide. And a lot of people get to this point as an entrepreneur and they say, I'm good. And what I mean by that is they say like, I'm happy with my life. My business doesn't need to become Apple. Let's ride the wave of this. And to that I say, that's your personal goal, man. Like, good for you. But we still need to make sure that business goes. You don't just get to take the foot off the gas pedal, right? And that's why I generally am not comfortable with this. But to a client, that's completely reasonable. So what I say is if you are older, okay, and I'm gonna give you, say you're past 40 years old, you need to focus on your traditional investments and start getting away from the business, because if you don't have a plan to grow that business substantially, then you need to focus on how you can actually develop outside of your business. And a huge issue that I see with people in this age range is their retirement plan is selling their business, or their retirement plan is hiring a general manager. And it's a horrible idea, because at the end of the day, you and your emotional connection to your business means that you have a higher valuation in your head that somebody's actually willing to buy it for. Somebody else sees it as a business that can cash flow them a couple bucks, and you view it as your livelihood. So it's not realistic to come in with that plan. And if that is your plan, you need to plan now. And again, on top of that, if your plan is the business, then you need to go back to step 1 and say, I'm gonna live off of nothing and invest every dollar back into my business. Additionally, for both of these levels here, I do recommend put $100 in a Roth IRA. Okay, obviously once you get past here, you start to get past income phase outs, but like put some money in a Roth. You don't have a public pension. I don't mean put, max out those accounts or max out your 401k. Well, I guess you can't have a 401k, but don't max out, like a simple IRA or something like that. Just put some away. okay? Put some away. And then go back to the drawing board and invest back into your business. My only contingency with this one too is if you're like super young. Like for me, I'm 20, right? So like I view somebody in the like 20 to 25 range as like, that's a time where you can say, I'm gonna step away from the personal investing and just put everything into my business. Now, this is super contrary to everything that people tell you online. You need to invest young, you need to invest young. It's true, I'm still investing, but I'm investing in myself. If you spend $100 at the casino, you're wasting your money and you don't get to be a part of this. But back to the point, if you're between 80 and 250K, that's when I say thumbs up to you. Maybe let's start looking into like seriously investing and building a portfolio. If you're in that older range of things, and this is where I say also as a young person, this is when like you max out like some Roth IRA, somewhere between $7,000 and $10,000 a year, you should put away. Super bland advice, but once again, if you're deciding I wanna go to the moon, like cut that down to $2,000 a year. Like genuinely, even if you're young, like cut it down and do it. But the flip side of that is you can't take a vacation to Hawaii, right? Don't tell me that you're saving for retirement, right? Or you don't want to save it for retirement because you want to invest all your money, but then on the back end of that, you're just going to go blow all of it at the casino. That's terrible ball. So the only excuse that you get away with this is if you say, hey, I was going to put $7,000 towards my business, but instead I'm going to put $7,000 in a Roth IRA or flip-flop. Both of these ranges, absolute no-nos. No car loans, no luxury cars, and I'm still very weary on buying your own personal residence up to this point. Generally speaking, as an entrepreneur, buying your home, not the best idea. The reason why is as an entrepreneur, you're going to need cash at some points, and unless you have great credit and you can get access to loans, a lot of times what you're gonna be doing actually is locking up your money away for 30 years into a house, and worse yet, here's the worst part, you have to sell your house if you wanna make an investment, which means you gotta move your kids out of their bedroom, right? Which is like a terrible thing. So you have to do all that just to reinvest in your business. And a lot of times, once again, boom, ankle weights on your business is if you own your personal home. Once again, super contrary advice to if you're not an entrepreneur, buy a home. Like you need to buy your own home. But specifically to the point, if you are young and you're in this range, this is when I do two things. So one, you build up your savings, because if you're gonna wanna make a venture at some point, you're gonna wanna switch businesses, you're gonna wanna make a huge expansion in your business, or you're gonna have to go into a period of low income because you're trying to expand the business, you need to have that rainy day fund, okay? Businesses go wrong. As an entrepreneur, you know, people say in general, personal finance, 3 to 6 months. As an entrepreneur, like dude, 6 months. And keep your expenses as low as possible so that can stretch to 8 if you need to. And then also, this is the point of an entrepreneur where I would say heavily invest in yourself. Continue to be learning skills, networking, going to different events, doing anything you can to really make yourself as valuable as possible. You know, this is where if you're brick and mortar, like look to get that next location. If you're in some sort of medical or law or finance, maybe you need another designation or another credential on your name to grow your business further. This is the way to do it. This is also when you can start to say, hey, if you're on the upper end of this, so let's say you're making 200 grand a year, at what point, like, we're starting to say, could you hire somebody for 100 grand to do what you do? And if you can actually buy your whole time back, which could be used to one, spend time with family, or two, grow your business even further. Still, this right here is where we draw the line, the bottom half of the pyramid. This is where we draw the line, because that is where I would say to somebody, hey, you are still like, you still need to be focused on one thing. This is not where we have the goal of diversification. We have the goal of like hyper focus on one thing. And then once we get past that, we talk about diversifying, okay? People try to diversify way too early on in a business, and that's a huge reason why they both fail in their business and in their finances personally. All right, so now let's talk about the top half of the pyramid. And this is when we're making $250,000 to $1 million in take-home pay a year. Now, this is a huge range, obviously. But things change when we get to this level, because this is when we get to the point of extreme comfortability. So this is the point where I say, if you are old, this is when you should really be heavily investing hard into real estate if you're older. And the reason why is real estate cash flows. You're at the point now where you could put, I mean, sure, everybody says you could put 1 million down payments on 1 million houses, but like, dude, you could get to the point here where you put 400 grand down on an $800,000 property, or even just buy a place outright. and just straight cash flow. And literally, like, that's a great retirement fund. Real estate's super stable. And you start to get to the point where you're building a trust and something that you can pass down. So I'm a huge advocate of real estate at this point, and you're gonna get much better returns than you would on something like a stock or a bond, and it's safer, it's more tangible. Now, I will say you're gonna get 10% from the S&P, but you're gonna have years where you go down 20%. And with real estate, yes, that happens too, but it's generating cash flow. It generally has a longer term value. Now, if you're young, this is where things get really, really exciting, because I see that there is like 3 routes to go. And once again, continuums, not individual basis, right? So the continuum being, hey, maybe this is where you really dive deep into your portfolio and you say, hey, I'm gonna build up, a $2 million portfolio, right? Because if you do this for a couple years, you'll have enough to do that. And when you start talking about having a $2 million stock or bond portfolio at 25 years old, you're getting to the point where you're gonna build generational wealth. Like, seriously, it's gonna be insane, and you can do that. So I wouldn't recommend doing that, but I would say do some of that. Okay, this is the point where like you can afford to put $10,000 into, your whatever, your IRA, your 401, whatever, okay? But this is where I say that there's like 2 routes to go, which is, there's 3 routes to go, then there was 1 route, and now we're on to the 2 routes, which are the more fun routes, okay? And one of them is you can go the real estate mogul route, as many people have before you. This is where it is realistic to go put, if you could take $1 million and go put 10 down payments out. Whatever, it's not a great ratio, but like those real estate properties over time are going to become massive, and they're going to give you huge tax breaks, and they're huge, huge, huge ways to like guarantee, you can't say guarantee, but give yourself a high chance of success long term. And it takes away big time from your business risk, right? It takes away from the fact, what if your business fails? You got all these properties to fall back on. Now, my flaw with the real estate side of things, the reason why I am a little bit against it is because your money's locked up. And so it's great, but then it's also like, well, your money's locked up, and that's gonna really hurt your expansion of your business. And this is where we dive into the 3rd category, which is reinvesting into your business. There's 2 parts of this. So there is expansion, okay? Literally, how can I get my business to do more stuff? And then there's also the realm of mergers and acquisitions, which would be great. And that could be acquiring a business in a different sector. So, it doesn't have to be one-to-one. So I could be a financial advising firm and buy out another financial advising firm, or I could buy out an accounting firm, right? And that's a whole different kind of thing that I can take on. I could buy out firms in different industries. I could buy out a real estate group or something like that if I want to diversify my business, and you make a holding company to do all of that. Now, personally, if I was in this range, especially at a young age, I would be eyeing the top part of the pyramid, which is $1 million+ earners a year. And as far as it's known, 99% of entrepreneurs that are successful will not break into the $1 million range with one company. Yes, you can have a company that blows up and do great, but most of the time it's I have a successful company and I start becoming 1, an investor, and 2, a manager. This is where if you get to the $1 million+ range, if you're old, who cares? You're making over $1 million a year. I don't even put investment advice here. I say donate to charity and have fun, because like, dude, really, like, you have so much money, like, it really doesn't matter. I would say like estate planning is in this, traditional investments, real estate, great. Probably not the time to take on the responsibility of running your own venture capital firm. Now, if you're young, and young at this point is gonna be like 30s, 40s, early 40s, maybe even 50s. That's when you start the venture capital fund or the real estate fund. I don't see a way around it. You can go gas and oil as well. But this is the point where we actually have to step away from traditional investments because they don't give us great tax breaks. Even capital gains tax is gonna be 15% or 20% at this point. Like, there's nothing you can do to get around that. There's zero tax break that comes with buying shares of Apple, right? But there is tax breaks when you get into limited partnerships, right? There is tax breaks when you start directly investing into companies. Those are capital losses for a while, and then you can recoup them, but you diversify at this point. So generally, I hope this gives you a guideline of maybe where you're at on your journey, or how you should plan out your journey and say like, well, if I'm at 200K a year, like, what are the couple options that I have, right? And most people will never break past these front 2 ranges here, but I'll tell you that the reason why is because they take traditional advice. And also, this is why financial advisors actually keep their clients here, because they give them the assumption that they're taking on way less risk than they should. So if you're 30 and you're making 220K a year, like you're doing great, you have risk. You can take on risk, okay? So don't be afraid to say like, you know what? I am gonna hire that employee instead of putting that money into an IRA. And advisors won't tell you this because they make money when you put money in an IRA. So when your advisor is telling you this, it's like, man, what is their best interest for me? Is it to build up my portfolio as much as possible so they can keep collecting their 1%? Or is it so they can really actually grow you and help your business? And that's what I specialize in for different clients is I wanna come in and say, how are we gonna balance the two? And we both understand that I'm gonna get paid no matter what, and the more money that you make, I'm gonna get paid too. So I'm not worried about you putting a couple extra bucks in your stock portfolio. Let's create you generational wealth, not just, hey, I got a nice mutual fund setup. All right, if you found this valuable at all, make sure to subscribe or follow at Shebloski on all platforms. I give out all types of finance, entrepreneurial, mindset, motivation content, whatever it is. The point is if you wanna grow your business, grow your net worth, you gotta follow me. I'll be putting out more content and I'll be in the game for a long run. Thanks.